Hello and welcome to another edition of 30 Minutes with Sir Martin Sorrell. Over the past few months since we started the show, I've got friends and non-friends asking me why we do this episode with Sir Martin and not with some other global leader in the business. And since people started asking me this question, I've started asking myself the question. And that's not tough to understand. Simply put, he is the largest in the business in the world. Secondly, he has more interest in India than anybody else in the advertising business. Thirdly, this show appears on CNBC TV 18, which is a business channel. And Sir Martin has this amazing knack of simplifying the economy and connecting developments in the economy across the world to the business that we focus on in Storyboard. So it's not difficult to figure out why Sir Martin is a regular on CNBC TV 18. Another little sort of deviation is we've had some amazing luck with Sir Martin and the interviews we've done with him. When the POG deal collapsed, we had a scheduled meeting, rather conversation with Sir Martin on the very morning. And I think we were the first in the world to get his comments on that development. Sir Martin, thanks for joining us. To begin with, what are your reactions to the failure of the Publicis-Omnicom merger?
Yes, you always pick good times. Well, I guess we weren't. I guess we weren't surprised, Anant. I think we had said for many weeks that this so-called merger of equals was doomed to failure. I think we were a bit surprised by how speedily it unravelled and how speedily the obituary was announced. But having said that, I think it was predictable. I think after you and I have talked as long ago as July the 8th last year or 7th last year, I said to you that strategically it was a volte-face for both companies, that structurally it was clunky, that it was going to have regulatory issues, which it certainly has had here in China, and that it would cause problems with clients and with people.
Today, as we talk to him about how 2014 was for him and how 2015 will be for him and for the industry, we've had a little bit of luck too. Over the past few days, we've had issues such as Sony pulling out of FIFA, Coke making adverse remarks against FIFA, Uber getting into a lot of trouble, the IPL mess that we see here at home, and it'll be interesting to see what he says. I'm sitting here in Bombay and Sir Martin is right now in Bangkok. Hello, Sir Martin. Good to talk to you. And the first question is the obvious one. How was 2014 for you and for the industry, and how do you think 2015 will be?
So first, a few thoughts on 2014. Well, we've seen a similar pattern in Q4 so far as we saw in Q3, and namely the second half of the year was not as strong as the first half, but that's understandable because the first half of last year was weaker than the second half of last year. So a similar pattern overall in both halves as we go through 2014 as we saw in 2013. As far as 2015 is concerned, I think a similar pattern again. As Christine Lagarde would say, mediocre growth for the world as a whole. This year, about 4.5% nominal GDP growth for the world. About 2% inflation, so real growth around about 2.5%, 3%. Next year, I think a similar pattern, 5% for the world, 2% inflation, 3% real. Similar patterns too, Asia Pacific, Latin America, Africa and the Middle East, Central and Eastern Europe, stronger than the rest of the world, although US better. I think the UK next year will be tougher after the election. France, Italy, Spain continue to be a little bit difficult. Maybe Spain a little bit of recovery, but France and Italy difficult. And Mr. Renzi has, flattered to deceive at least at the beginning. But Italy remains a challenge. But France is the toughest. We've got an election coming up there in 2017, I think. Germany remains a good market for us, but obviously, if the Germans don't agree to reflation of Western Europe and Draghi's plans around QE, there will be further difficulties. But we have this strange balancing act that's going on at the moment. The US is reducing QE. Interest rates have not risen yet, but they may do in the near term. And that's balanced by what Draghi is trying to do on QE in Europe, and balance what the Japanese are doing also with QE for the first time, and Chinese interest rates coming down, and indeed Indian interest rates coming down. So we've got this sort of strange balance, and I think inevitably interest rates are going to stay lower longer, and we've seen sterling coming under pressure because there's a general view now that those interest rates, which people thought were going to rise in the UK, are not going to rise quite as quickly as people predicted. So overall, moderate growth this year and moderate growth next year. I don't see any great change. 2016, looking even further ahead, we'll have a cracking Olympics in Brazil. I'm sure it's going to be magnificent. We'll have a European Football Championship, which will be strong as well. And then we'll have the presidential election when maybe probably Hillary Clinton will be elected the first female president of the United States, and that will be an interesting prospect. So all in all, more of the same, maybe with a little bit of improvement in 15 and maybe more so in 2016.
That's interesting, Sir Martin, that you haven't mentioned Russia or Ukraine, the two subjects you love to talk about, but you haven't mentioned them at all today.
Well, the geopolitical risks, the black swans, I guess, were Hong Kong. I don't think people saw that coming, and I think that's the biggest geopolitical risk. The other black swan, probably, well, several, was what happened in the Ukraine and Russia, and that was the primary focus 3 or 4 months ago before Hong Kong. I think Hong Kong remains the biggest issue. It looks as though it is being sorted out, and the Chinese President Xi has I think, handled it effectively and well, and I think will handle it effectively and well in the future. He, in a way, has no choice. The Russian-Ukrainian situation remains serious, although there did seem to be a little bit of progress with the gas deal. Ebola is the other black swan that suddenly emerged, but we have all those grey swans as well. European monetary issues, fiscal issues, lack of growth. The US deficit continues to hit new highs, well over GDP. And so that's another, I think it's $18 trillion, so that's another point of concern. And then, of course, Middle East, ISIS, obviously of great concern too. In the Middle East, things are a little bit of progress, I think, in Egypt, where we're seeing a repositioning of Egypt under Sisi, I think, which is good for Egypt and maybe a little bit better for the region, but serious problems still in Syria and around ISIS, as you know, and worries about it. Oil price coming down is maybe a black swan, or maybe it was a grey swan, because probably predictable because of the rise of shale and the threat to Saudi Arabia's prominent position. And the decision today by OPEC not to cut supply probably means that the oil price, well, we saw a fall in the oil price this morning. Airline stocks responding positively in respect to that. But what hasn't been factored in, I think, quite yet on economic growth is the positive of a fall in the oil price, which will give more consumption opportunities in most economies. In India, of the 4 BRICS, India is the strongest at the moment. The Modi effect is coming through on our business, and even before the election we saw significant growth, and after the election we've seen even better growth. So we're very bullish. Of the 4 BRICS, India is in the vanguard at the moment. I think followed, I would put China second, Brazil third. Obviously the uncertainty caused by the election didn't help. Maybe Dilma's appointment of Levy as the finance minister is a more positive sign, we'll see. But the election result was not received well. So Brazil third, and I will put Russia fourth for the reasons you brought up, that namely that Russia and Ukraine give us significant difficulty, particularly for Germany, because the biggest trading partner with Germany remains Russia and vice versa. So Russia and Ukraine is important, but there are other issues, namely Hong Kong, which I think are more important.
It looks like Sir Martin also believes that Achhe Din are coming. With that, we'll take a short break, but when we come back, we're going to discuss something that's been all over the press in India as well, which is Uber and the PR bashing it's been receiving.